pleasant day to the happy and smart learners. I'm Dr. Shobha Edward, Principal and Head of the Department of Corporate Secretaryship, KCS Kasinada College of Arts and Science. Today, we shall have a small recap on the concept income from house property. Annual value. Annual value is taken by considering the MRV, FRV, standard rent, and actual rent. The actual logic of calculation is MRV or FRV, which is more, that or standard rent, which is less, that or actual rent, which is more. Unrealized rent is the rent which is not realized. Exempted house property incomes, agricultural house property income, property held for charitable purpose, house used for own business or profession is taxable under the head business or profession and not under house property. Property held by a registered trade union and letting out of godowns, etc. The format for calculating income from house property of a let out house: gross annual value less municipal tax actually paid by the owner. You get the net annual value less deduction. Under section 24, the two deductions that can be given: 30% of net annual value and interest on loan, together deducted as deduction under section 24 from the net annual value, you get the income from. Gross annual value is taken as nil for one self-occupied house. Municipal tax is not allowed. Standard deduction for all houses except self-occupied house is allowed. For self-occupied house, only interest on loan is allowed. Self-occupied house may show loss from house property. If more than one house is self-occupied, one house whose gross annual value is higher is taken as self-occupied, and all the other houses are deemed to be let out. The calculation of GAV or annual rental value, MRV or FRV, which is higher, standard rent is compared, which is less, actual rent is compared after deducting unrealized rent, which is higher, and from that, vacancy is deducted. This gives the gross annual value or the annual rental value. Thank you. Have a happy and smart learning. Stay tuned with Smart Learning with Dr. Shobha Edward. Thank you.